Okay, so it's been maybe an hour or so since I posted my last video. I just wanted to go over overnight inventory and the basically how auction market theory works as a whole. So this will be the start of that series. Um, this is a this is when I actually traded in a live stream. So this will be the perfect example. Note the closing price here. I believe this was my what? This might have been my first or my second live stream. I'm not completely sure, but note the closing price. As I say, you want to see a closing price on the New York Stock Exchange, and the opening price no more than two ticks. No more than two ticks above. No more. So price didn't go two ticks higher, which is perfect. So that means most of the players who were overnight, and if we split this up, we will know who the players are. Most of the players who were pre-close, Asia and London, were short, especially London here. But that's irrelevant. I just wanted to point that out. So we merge those and we get the overnight session. Um, so knowing this, I was um, I was looking for a short up until what? So I don't trade the first hour, A and B, because that is the initial balance. So C and D is when I actually start to look for shorts. But I was at a time limit because, as I say, between 10 and 10:30, which is D and E period, that is when I know that the market will actually reverse and it won't go short. And the reason why is I believe it has something to do with an algorithm. My hypothesis is those who were short overnight essentially get frustrated that the burgers didn't push price lower. So they essentially unload their shares and they either get squeezed or they just market close. So I was on the time limit here. So I entered my short at I believe D period. Um, and I closed early. My plan was to short to 1549, but I was so nervous because it was after 10:30 that we would get I would get short squeezed essentially. So I closed it early, but I still got a profit. I closed at 1478 I believe. If you want to see the screenshot, I will post it. I will show you tomorrow on a live stream. I'm not to LARP or anything. I just want just want to be clear that I actually did trade that. So I closed early because it went exactly where I thought it would. But after 10:30, which was anomalous, I've never seen that happen before. So that was quite interesting. So another example of a let's see, another example of a okay, so this is today. We've already went over this. Another example of an overnight inventory will be this. We see here, um, let's reset. For some reason it acts buggy, and it doesn't want to reset the London part, or maybe London hasn't started yet. What time is it? Yeah, London hasn't started yet. So we have Asia in pre-close so far. Right now, we still have a overnight inventory. First, I just realized I am going way too far, way too fast. First, I must explain what we're looking at here. Essentially, what we're looking at are bell curves. I've already explained this to my friends in Alpha DAO, so I assume that you all know this as well. But I realize that this is now a YouTube channel and this is global. So I'll explain auction market theory from the beginning. What we are looking at is essentially the 30-minute chart. So you see J, K, L, M, N, O, P, S candlesticks here, but they are all pushed to the right to create a bell curve essentially. So what this shows us is the amount of time the market spent in the specific area. So this creates all types of various anomalies and edges. Some I will share with you. Others I will keep to myself just because edges decay in that way. But I am an open book. If you ask me the right questions, I will give you the right answers. So that's how that works essentially. So what I like to trade primarily are bimodal distributions, right? I play these all the time. A bimodal distribution is essentially this is one I actually traded, I believe. Wait. Oh, this is what, February 8th? What's the day? February 16th. When was that? Oh, fuck. I just accidentally. Okay, so this right here would be a bimodal distribution. But it hasn't been traded into yet. So we'll see it eventually. But this right here would be a perfect example of a bimodal distribution. I did not trade this. I believe. I don't think I did. But here's a perfect example of a good edge. So we see here that the market spent most of its time here in this blue, and this gray area is so this is a bell curve. So 68% of the time spent within this daily session was spent within these green lines here, which equates these green lines here, which create this blue shading. This gray here is the rest of that. That is what, the 32%, I believe. Yeah, 32% of time spent outside of that. So we have essentially a very strange tale. Not quite bimodal, I would suppose, but the next day, you see the market filled in this gap in time. And this happens all of the time. This is a very exploitable edge. I like to trade these all the time, even though I did not trade that one. Another example would be, this is when I did trade. Let me go back. It was last week. Was it this one? Yes, it was this one, I believe. So in my Discord, not my Discord, not like a paid Discord or anything, just a Discord with my friends. I was talking about how fucking weird this distribution was, and how we'll eventually start to trade upwards. So I took a position. I believe this day. I'm not quite sure. I'd have to February 6th. February 6th. February 5th to February 6th. Okay. Wait, what? Two reds? That's not right. Something is not right here. Okay, I accidentally absorbed a purple. Oops. That's the New York Stock Exchange. So let me just merge these right quick. So I knew that this here would eventually get filled as we filled in most of this. I will post screenshots. I'm not sure how to pause streaming, but I will post screenshots of me saying that. I'll edit it in. Don't worry about it. If I can't edit it in, I'll put it in the thumbnail or something. I don't know. I'm new to this. Okay, we're working out the King's friends. We're working out the King's friends. So I knew that this part right here will get filled in as most of this was already filled in the next day. So I knew for a fact that we would at least come up to here, and we actually did. So I like to trade these strange humps here, and they always tend to be very, very well, very good plays to play, essentially. So that's all for now for the auction market theory. I hope I've explained it well enough. There will be more explanation in the future. I hope you have a good night. Be safe. Good luck, and I will see you later.